welcome to our special show, Gold Rush. Now, we hate to tell you so, but your grandma and your mother was so right. The Indian women's love for gold has now passed the acid test of global uncertainty. With Trump's tariffs and the world economy in chaos, everyone is now flocking to buy gold, the safest possible haven. Gold is extremely valuable now. Today, that is on Akshaya Tritiya, the price of a 24-carat gold is inching closer to 98,000 rupees per 10 grams. 22-carat gold is closing in on 90,000 rupees per 10 grams. And now, today is Akshaya Tritiya, like I said, and it is a customary to make a purchase of gold in many families. My colleague Charu Singh is at Mumbai Devi Road at a jewellery store, and she's with some excited customers. Charu, how is it looking there?
Hi, so as you just said, Akshaya Tritiya is an auspicious occasion for the Hindu and Jain religion because they believe that the wealth accumulated in any form on this day is only going to double over and benefit over the coming years. Now, we are here at the Zaveri market in Umedmal Tilokchand Zaveri, who have been here for the last 100 years, and we are going to be talking to Mr. Suresh Jain to, basically explain to us how this entire thing is, played out, how many customers come, and how there is an excitement about the entire hustle bustle in the market. So sir, बताइए आज के दिन कितने लोग आते हैं?
आज का दिन ज्वेलरी में एक बहुत बड़ा दिन है, 3.5 मुहूर्त का दिन है और बड़ी अच्छी बात है। अक्षय तृतीया के दिन लोग धनतेरस की तरह साउथ में इसको सेलिब्रेट करते हैं और आज यहाँ पे भी जिनको लेना है वो एक अच्छे भाव से, जो भाव 1.25 लाख 1 लाख 2,000 पे चला गया था, आज 96,000 हुआ है। तो भरपूर सुबह से हम लोग आए, 9 बजे से आए, रोज यूजुअली 11 बजे आते हैं, 9 बजे से बाइंग शुरू हुई है। कोई कॉइन लेके जा रहा है, कोई बड़े सेट लेके जा रहा है, इस तरह की अच्छी ग्राहकी चल रही है। एक बेस्ट टाइम है। 3.5 मुहूर्त की वजह से लोगों का उत्साह भी और बड़ा हुआ। लोग ऐसा मानते हैं कि कॉइन ले जाते हैं या कुछ भी सोना ले जाकर घर में उसकी पूजा करते हैं और उसके बाद उसको कबाड़ में रखते हैं, सालों साल वृद्धि होती है। ऐसी फीलिंग के साथ लोग खरीदारी कर रहे हैं, एक अच्छी सी खरीदारी हो रही है।
And we must also understand that from the last year, this festival has given, an increased rate of about 32% in the rate of gold. And as per several analysts as well, the rate is only going to increase to up to even 7% for the next year. However, there have also been recommendations made to, go up to buying silver as well. That's all from the ground report of NDTV Profit for now.
Well, yes, let's also welcome in Sachin Jain, the regional CEO, India World Gold Council. Sachin, coming to you first, 32% jump in the last 1 year, but what we have seen in gold prices. What is your analysis showing? How much more of an upside can we expect when it comes to gold?
Hi, first of all, thanks for having me on and wishing all your viewers a very happy Akshaya Tritiya. As your colleague just now mentioned, it's a day by which, prosperity happens, things multiply. And I'm certain people who invest in gold and have perhaps bought last year have felt that this is the truth. To your point, what's been happening with gold? We at World Gold Council don't predict price, but the fundamentals on which gold demand is based on, the gold pricing is based on, things like geopolitics, things like a safe haven promise of gold, things like central bank buying, the investor class that's really been accumulating gold, particularly from the last from the 1st of January upwards. I think the pillars of strength of gold are very much in the favor of what gold is. So I think it's going to be a very strong foresight even for the coming time. And my only bit would be that you need to look at gold from a long-term perspective and long-term view. And from that perspective, it's certainly going to be performing very well.
As you were mentioning that there are multiple fundamental reasons why gold prices are rising higher. But can you just give us some idea of how long will this upcycle in gold prices last?
Well, actually, there are various reasons, as I mentioned. So if you look at last year, the dominant factor of the whole progress or the change in price that we saw was geopolitics, started by by the real wars and moving into the trade war conversation. The first quarter was dominated by the trade war conversation and how the Liberation Day would sort of ease it out and get more clearer. If you look at the last few months, it's been largely dominated by the financial markets where the investments have gone up. I mean, look at gold ETFs. Last entire year, the addition of the AUM was about $3.8 billion. And just this year, the addition has been upwards of $17-18 billion. That's already happened. And, if I were to share some rallies with you, The $2,000 to $2,500 per ounce took about 1,780 days. The $2,500 to $3,000 took just about 220 days. And from the 1st January, and we dished at $3,500, took half of that time. So it's been a very strong upward movement from that perspective. Now, what element will play out? I think when you look at long term, the elements around central bank buying will be strong. The elements around, how geopolitics is not going to be all settled on will play out.
So, you've seen prices kind of, seeing a very significant uptick. Like you said, investments and the financial markets have what's been driving. But we have seen somewhat of a correction, I wouldn't call it a correction, some weakness in the past 2-3 days in terms of prices, even today morning. Do you feel that, the bull run is over or there's more to go? And would there be a period of consolidation or correction, or could we see the bull run continuing as it is?
Well, I think what you mentioned, I would say as correction, and I would agree to you, these are corrections and small sort of adjustments. But I wouldn't see, when I look at and the whole analysis of what's happening around gold and what's the pillars of gold, I think the mid to long term, a lot of that is in the favor of gold and the gold's growth. Now, some corrections will happen, perhaps yes. Would it be certain to saying what's going to happen to gold in the long term? Long term elements are very strong. That's what I would repeat. So short term, I wouldn't worry so much. And the fact being that the confidence in gold is strong, the confidence on central banks of different parts of the world is strong, and those are the core elements which impact the gold price.
And coming from, from the demand perspective, right? Like today we are having this chat because it's Akshaya Tritiya, but like I saw in the release, the demand for jewelry has gone down, and it's consumer behavior when prices are going up, somewhat hesitant to buy fresh gold and jewelry. How do you expect demand to play out from the jewelry standpoint and coming from there?
Well, actually, it needs to be well interpreted. So when our report says that the volume has gone down, whereas the value of what the jewelry has been bought is upwards of 22%. Now that's huge. The fact that consumers have invested their hard-earned money to buy jewelry for that increased percentage is a big promise on their confidence in gold. If a family has, for example, in a budget for a wedding is 100,000 rupees, that budget wouldn't become 140,000 rupees as gold has gone up. But the share of 100,000 rupees for a wedding, the share on gold has only gone up. That's purely how confident consumers are in jewelry. So when you look at consumer demand for jewelry, I think we need to look at it from a value perspective as well, which certainly has gone up. And we've always historically seen, and be it level of when gold was at 20,000 rupees to 40,000 rupees to 60,000 rupees, and last year hovering between 60 to 75,000, every time the price of gold goes up, the consumer waits and watches. Once it's consolidated, the consumers come into the market. And that's what we believe will happen this time around as well. Unfortunately, what's happened is in the last 3 to 4 months, the rally has continued. The price is really, moving so fast, which the consumers not been able to sort of, lay their hands on what they could call is stability. And I foresee that consumers will come back. And you need to look at the consumer demand from the lens of value as well as volume. And when you look at the value, so if I'm an individual or I'm a family, I have only that much money and I've invested that 22% more of that in gold. And that gives a great sign of confidence.
Right, sir. So a couple of questions on the macro side. Now, as you were mentioning that one of the reasons behind this rally overall globally in the gold prices is the fact that central bank has been buying. You have access to so much data, so much analysis that goes in. How much more or for how much long more will this buying from central banks globally will continue for gold?
Well, see, central banks' minds is again dependent on how the geopolitics environment is, number one. It's also around this whole growing conversation around de-dollarization. It's been going around, and that's not today, that's been going on for about 18 months. The whole conversation around the weakened dollar. And generally, when you look at the various things that are happening between banks and the debts in the world, if you look at just the debts that are happening in the world of A country versus B, it's just huge. And I think the growing element around, particularly around the sort of growing markets and the developing countries, the importance of having your strength and your sensibility around gold is playing out. I mean, we've seen over the last 18 months last year, the large impetus was by the Central Bank of China buying. Then India has been buying quite a lot. RBI has bought quite a lot. 2023, we bought about 17 tons. To 2024, RBI bought upwards of 78 tons. So that's been a huge growth. And we believe that that's impetus around, again, the environment, around geopolitics, around de-dollarization will continue. But countries will be investing in gold to have a reflection of their strength.
Got it. Sachin, lastly, what about the demand from the ETF perspective? How is that playing out?
Very strongly. I mean, ETF is a phenomenal product. I think it's a product that sort of you can fractionalize the buying of gold. I mean, the smallest unit, one single unit, is 90 rupees. That's 0.01 of a gram of gold, which is great. I think as a product, it's regulated. As a product, it is backed by physical gold. And I think the Indian consumer, as we go forward on more awareness on ETF, I believe it's going to go much, much stronger. To give you some numbers, end of 2020, 1st January 2024, the AUM was about 41 tons. 1st of January 2025, the AUM was about 59 tons. I mean, you could say that 18 tons is not so large, but 18 tons on 41 tons is very significant. And we've already seen that this year there's been great growth. And I really believe that this product is at a cusp. It is here to grow, and a large form of various investments in financialization of gold will come under ETF.
Right. Well, thank you, Sachin. Thank you for joining us and giving us your time and your perspective about the gold prices. Thank you, and a very happy Akshaya Tritiya as well. Well, moving on, we also spoke to Navneet Damani of Motilal Oswal and Saurabh Gadgil of PNG Jewellers about the surge in the gold prices and asked them if they expect the volumes to go up further during festive season. Listen into what they had to say.
So we've seen a sizable run-up in gold prices. As you mentioned previously, it's about 25% year-to-date returns just in the last 4 months. And as we speak, it's pretty volatile. Every alternate day, you're seeing about 1,500 points movement in gold. This is something unlike what gold is likely perceived as an asset class. It's typically a safe haven asset class, and today it's more of a financial asset than a safe haven asset. So there is enough and more demand for gold even at every price point, and people are just waiting for a reasonable correction to gather it once again, because this in the last 5 years have delivered a better return than any other asset class which most of the people are investing into. Now, what is going to be the demand for Akshaya Tritiya? I think Mr. Gadgil will be able to tell you better, as he owns a jewelry store and probably a chain of jewelry stores. But I think the ground level research that we've done, typically the footfalls are lower. And there is more of cannibalization between gold to silver at this point in time. People are preferring lower caratage of gold, or probably waiting for silver as an investment, because that is not caught up significantly as far as gold is concerned. And I think price point wise, we are about 4% or 4.5% away from lifetime highs. Better levels will be anticipated, and there are a dearth of people waiting on the sidelines for any correction to enter into this metal at a lower price point.
Right. I mean, Navneet, good morning, and Saurabh, good morning as well. I think, Alex meant to ask that question to Saurabh, and he just said Navneet. But Saurabh, let me take that with you as well. How are you looking at it in terms of the demand? If you have to compare the last couple of years, are you seeing the mood come off, taking into consideration higher pricing, and that in turn impacting volumes?
Yeah, good morning, and wishing everyone a happy Akshaya Tritiya. Like Navneet said, right now, prices are at all-time high. There's been huge appreciation in gold. But having said that, people's interest in gold as an investment, as a store of wealth is very strong. Yes, we have seen a lot of people swapping old gold for new jewelry. So primarily wedding shopping is almost today 50% the currency is old gold, and that is what people are preferring today because of the high prices and due to that the budget constraints. But in between there were a lot of fears on gold seeing a huge correction and gold could see a big downfall, but that has not happened, and that again has reinforce people's faith that looking at the geopolitical situations around the world, gold seems to be an asset which will be in a bullish mode, and that has really seen people coming and entering the gold market physically. There's been no selling pressure, and people are buying gold. Quantity has been a little struggle because of people's budget, but in value wise, will be 30-35% more. So Akshaya Tritiya, I think value-wise, the industry should be aiming for a 20-25% hike over last year. In terms of volumes, I think we could see a dip, maybe a single-digit dip, around 8-9%. But the sentiments are bullish. Today is a whole day of Akshaya Tritiya, right from morning 8 o'clock till midnight is the Muhurat. So, we see a lot of, pent-up demand being converted today. Bookings have been moderate. I would not say there have been super bookings, but bookings have been quite decent. And people interest in the festival, in Akshaya Tritiya, as a part of this Sariti Muhurat is reinforced again. So we're hoping for a good day of sales as we progress today.
Point made, Saurabh, and thanks for answering the question that I originally asked. Navneet, and to you, you fielded it quite well, even though the question was not intended for you. But let me ask you this then, because you've seen a little bit of a cool off in gold prices from those elevated levels of close to 2,500. Rather 3,500. See, there you go. The numbers have moved so quickly that I'm talking about 2,500 still. But $3,500 in the international market. Where do we go from here? Because a lot of people talking about gold-silver ratio, but that's not panning out. And while you have trade tensions, they've dissipated somewhat. So does that come into play? Dollar has remained below 100, stays at 99. If that does move above 100, is that the biggest risk factor for gold?
Well, there are a lot of risk factors as we speak. Primarily, it's largely driven by a trade war situation between China and US, and the tariff imposition on each other has kind of taken the center stage. Demand side story continues to remain as it is, but the supply side story is pretty robust, but the demand side scenario has changed drastically, largely because now what has happened? You see dollar index correcting from 106 levels to 98 levels within a span of no time. And the so-called cuts in interest rate which the US was talking about seems to be a far-fetched at this point in time, because these kind of tariff is going to lead to higher inflation, slower growth, and eventually the postponement of rate cuts is likely to happen. So all in all, this scenario is not likely to play well neither for US nor for China. And both of these biggies have to come on the table and probably settle out their issues, because China is in a phase of recovery over the last 4 years since the COVID, and US also is not in a great state. The 10-year GSEC is also a very interesting number, where it was down to about 3.6, 3.7% and now shot up to 4.3%. Primarily, US is sitting on a 36 trillion debt, and to service this debt at a 4.3, 4.4% kind of a yield is going to be a very, very massive task for the US Treasury. So I think this is a matter of time when these trade-related tensions are going to come at a standstill, and maybe the prices are likely to kind of stay where they are, or at least cool off.
So Navneet, when you talk about prices cooling off, what's the potential that one should be watching out for? How much downtick from the current levels?
Well, we don't have a number in place, primarily because every now and then you see the statement keeps on changing very significantly.
Yeah, but we can have a range, right?
Kind of $100. Yeah. So that's what I'm coming to. We as a broking house, and as we expect that anything closer to 3,200 and 3,150 is a level where you will see buying interest come once again. On the domestic front, if I say about 91,000 is a level where we expect that buying interest will be very massively into gold. But we also spoke about the gold to silver ratio. Historically, we've seen that it is only 2 instances gold to silver ratio has sustained above 100 level for a brief period of time, once during COVID and once during 1980s. As we speak, it is around 102, 103. We expect that this ratio has placed its hand, and maybe it's time for now silver to outperform gold, and this ratio can have some skewness back to about 1992 levels once again.
Okay, so then as a house, while you're not giving targets on gold at this juncture, that's understandable, Navneet, would you say that the advice right now that you're dispensing is perhaps book some profits if you can in gold, if you've got the ability to, and I'm talking about primarily people who are investing in ETFs, and would you say that it makes sense at this juncture with silver having underperformed in a big way? And if I'm not mistaken, 1 year performance or 6 months performance, I think silver was down 2% last I checked. I'm not sure what the current value is, but would you say that there's a trade in silver?
So in the year 2024, silver gave you about 34% kind of returns, while gold gave you about 31% kind of return. For the year 2025, for the last 4 months, silver has underperformed, whereas gold has rallied very significantly. Now there is definitely a trade where we expect that silver could eventually catch up and the rally could extend to 110 and 125, 1,25,000 rupees per kg for silver over the next 12 to 18 months. Now gold, we have definitely have a target of 1,01,000 rupees as a target and maybe $3,800 as a target. But buying comfort is not at the current price. We expect that if an investor has to invest, it has to be a better price. If it's a tactical investment, one should look to stay away from gold. But if it's a long-term investment, you have to definitely park some money, then wait for a price correction of about 5%, where your risk and reward will be favorable to enter and maybe garner about 15% returns over the next 2 years.
Thanks, Navneet. Saurabh, running short of time, we just have a minute. Very quickly, is the retail growth lower as compared to the growth you're seeing in gold prices? And in terms of the old gold exchange, how much is that contributing, just to get us an idea?
The retail growth in terms of value is more than the gold price appreciation. I think retail growth in value terms would be around 30%, which I think is quite good considering the entire market scenario. People are looking at gold as a currency to buy new jewelry, and that today is around 50-55% of the entire sales. So that typically was in the range of 18-20%, which has gone up to 55%. And I think that's primarily because of the high prices and people's budget constraints. But having said that, people are buying jewelry. Wedding shopping is going strong. Diamonds have seen a good run as we speak, and I think overall people's interest in jewelry remains strong. Silver and gold, I beg to differ, do not compete because silver to hold physically is very difficult. Yeah. So the silver physical buying is very different than gold physical buying, and these markets both coexist. So I think overall things are looking good for the industry as we speak. All around, just the data has come from World Gold Council, where India has been the largest importer of gold last year. So that really speaks on the India's volume consumption.
Absolutely.
And I think things as we go ahead look the same. So let's all hope that this Akshaya Tritiya and the coming year should be a good year for the industry.
Absolutely, hoping for the same as well, because we'll wait for all of us and our husbands and wives to buy each other gold and jewelry for our investments as well. But thank you, Saurabh. Thank you, Navneet, so much for joining us on the show. And all the husbands who are listening as well. I think, Saurabh is promoting purchase of jewelry. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned.